A big warning for silver and gold investors, and it's coming from Wall Street, but it's a warning that could be big, big, big good news for us. I'm going to give you three examples, and most importantly, the reason why this could represent a flood. I mean, something that we have never experienced in our lifetimes as silver and gold investors, a flood of new money coming into the precious metals. And won't that be fun? We deserve it. We appreciate it. I appreciate you joining me down here in the basement. I just want to say thank you for being here. I want you to feel like you found a little home away from home, a refuge from the storm. Please subscribe to the channel, give the video a thumbs up, share it with grandma and grandpa, grandkids, leave a comment in the comment section. And did I say subscribe? Oh yeah, super chats, always super appreciated. Never, ever, ever expected. And please never donate anything that you can't afford. Let's start. We're going to talk about this warning from Wall Street, but let's start by having a little fun by looking at some chart beauty. Let's do an update of where we stand right now. And thanks for joining me, guys. Again, Snap live stream here on a Saturday night. But let's go here first to the gold chart. This is the December gold futures chart from CNBC. And take a look at that. Man, we were up again on Friday. We are closing in on $4,000 gold. And when you hear what we're going to talk about next, this idea of $6,600 gold, right, which is real from a top Wall Street firm, comes into focus. This is a one-year chart. Let's zoom out and look at the 5-year chart. It doesn't matter. Gosh, we can't draw this line enough. I mean, look at the just beautiful steady increase in the price. We didn't see this, right? Spikes. Look at those devil horns. No, what we have seen is what I'm going to leave on the screen, a steady price increase. And we look at it from all. Let's look at all and see what we can see. Okay. Yeah. Wow. Looks like we had a cup and handle there, but what a breakout. Now that goes all the way back to 1980 basically. Let's go take a look at silver and see what we're doing there. Silver price, I believe this is again the December futures contract. Yes, on the COMEX. Right. We love our friends over at the COMEX. By the way, on Friday, yesterday, the COMEX traded over 500 million ounces of paper make-believe silver. Yes, like over 63% of the annual world silver mining output was traded in one day on the COMEX. Not that we're going to, insinuate that the price over there is manipulated or anything. But again, guys, when we look at this chart, we can go all the way back here and basically same thing, just a real steady. Now the rate of increase does increase. It's about as technical as we get. Starting maybe around this point, which was back in now about a month ago, but nothing to worry about. What we don't see on this chart is a straight spike up. I'm going to talk about this tomorrow during tomorrow's silver focus live stream. But we could see, what we have not seen is a spike, a squeeze, a real squeeze. What we have seen in silver over the last, 2 years, basically, even if we go back we won't go to the 5-year chart right now, is a steady increase. If we do see a spike up, okay, a squeeze, a real squeeze, let's say silver squeezes up to $68 per ounce. It will fall right back down. However, what will likely happen is if, let's say we go from $46 to $65 in the matter of a day or 2 or 3, whatever, like a real spike squeeze up. When we come back down, I would think that we're probably going to come back to like a level of $54, $55, $56 per ounce, that will be kind of the new floor from which we could start moving forward, because things on the silver market are absolutely screwy right now. I mean, like screwy like we've never seen before. In the COMEX, in the LBMA, there's like 1 billion ounces sold short in the markets. There's all these distortions in the paper market. The EFP exchange for physical, the difference between The London market and the COMEX market is screwed up. The lease rates are screwed up. It's very expensive to borrow shares of the SLV ETF. So anyway, this is about the big warning from Wall Street and how we could get a massive flood. It's a good warning for us, for those of us who are invested in the precious metals. I have 3 examples I want to share with you right now that show how things are changing, and changing really like never before. Let's start here, and let's go to the top. Let's start at the top. What do you say, guys? Okay, from metals and miners, the great wealth transfer. Banks have quietly piled into gold. And remember, what's good for gold, it will be good for silver. They're like, siblings in the same family. Gold's the big brother, big sister. Silver is the little brother, little sister. But the big banks have quietly piled into gold and are now publicly calling us all in. Wall Street's coordinated 4,000 to 6,600 gold targets, and Morgan Stanley's mind-blowing 20% gold allocation strategy signal the end of the traditional 60-40 portfolio. There's the headline. Gold price target of $6,600 is now reasonable, says Jefferies' Chris Wood, and here's why. So this is coming from Jefferies, right? One of the most respected big financial institutions. He says the financial establishment is experiencing a crisis of confidence that few are willing to acknowledge publicly. For decades, the bedrock assumptions of modern portfolio theory have rested on the stability of government bonds, and we know the world is losing confidence in government bonds. It's unfortunate, right? We don't like it. We aren't in favor of it, but it's the reality. The Chinese, the Saudis, the Japanese, nobody wants U.S. bonds anymore. And that stability of government bonds is the ultimate safe haven, and the U.S. dollar is the world's unassailable reserve currency. All of that is in jeopardy right now. We're seeing that on this chart. This came from Crescott Capital. This chart shows it like nothing else. The yellow line are the gold holdings as a percentage of foreign reserves for foreign central banks. Okay, we go back here. Let me draw on here for you. We go back here to the 70s, 1980. You can see that the world central banks held a lot more gold than they did U.S. treasuries. That flipped around when? About, let's say around the year 2000, roughly. And governments were kind of forced to buy U.S. treasuries. But what we are seeing now, the yellow line, which is the amount of gold held by the central banks, has made this critical cross, which they have circled, but I'll circle over their circle, and is now heading up, okay? In this type of chart, doesn't flip-flop around in weird directions. So very interesting what's happening there. But this is all about Wall Street changing their tune. The 60-40 portfolio. Look, Wall Street, here's the reality, guys. Wall Street never, ever, ever, ever recommended anything to do with gold because they didn't make any money, or anything to do with silver because they don't make any money off of it. It's not like bonds and stocks and mutual funds where they can skim money. It's a lot harder for them with silver and gold. So they always had their 60-40 portfolio, 60% stocks, 40% bonds. But now, and I'm going to show you 3 examples, we've got the big major financial institutions changing their tune and recommending gold. Okay, we're going to talk about Bank of America. We're going to talk about who else? Morgan Stanley. Let me get back to it. Let me get through this, because this, and what's good for gold is good for silver. Okay, it will absolutely have a major impact. But why is he calling for $6,600 gold? The shot heard around the financial world. In the hallowed halls of world finance, there are pronouncements, are measured, and forecasts are conservative. A number was uttered that sent shockwaves through the investment community. $6,600 per ounce for gold. This wasn't a fringe prediction from an obscure newsletter. It was the carefully calculated target of Mr. Chris Wood, the global head of equity strategy at Jefferies, one of the world's leading investment banks. Okay, so we've got Jefferies. Click, check. Okay, it's just absolutely wild. What he basically used to come up with his prediction was comparing the price of gold to comparing the price of gold to like the average disposable income of an American back in 1980 and applying that to today. And when you do that, you easily come to $6,600 gold. $6,600 gold, what does that come to for silver? I would think that gets us to, excuse me, our target. Where is it? Right there, right? The blindfolded silver bear, $85 per ounce for silver. We're talking about Wall Street recommending gold, guys. This has never happened. It's been ignored. Next, we're going to look at an article from CNBC, right, that talks about another big major financial institution. Before we do that, I do want to say thank you to our channel sponsor, First Mint. If you want to get some silver, that's all they do. That's their specialty, First Mint. They are owned by First Majestic Silver. That's Keith Neumeyer's massive silver mining company. So they mine the silver in Mexico. It's the freshest silver on the market, right out of the ground. Okay, it's mined in Mexico by First Majestic, sent to the First Mint facilities in Las Vegas, Nevada, the United States of America, where it is transformed into these unbelievably beautiful and unique silver bullion products, such as what I'm about to show you right now, this 10-ounce bar that I can barely hold up. That's the folded American flag for the folds of honor. You can go to firstmint.com and check this out. I'll show you how to get there in just one second. But that product and several other in their Folds of Honor series support the Folds of Honor Foundation, which provides scholarships to children and spouses of deceased and disabled members of the United States military and first responders. Let's go out to First Mint so you can see where to go. There is a discount code that you can use, VIPRB. And here's the First Mint website. You can look at all their products. You're the dragon, you're the snake. They have a discount right now, or I'm sorry, a special $1 over spot. They do have a discount code. It's easy for you to remember, right? It's just for us basement dwellers. VIP, like very important person, RB. VIP RB. Think Ron's Basement. But if you want to check out that Folds of Honor, you go to the store and you just go down here, second from the bottom, Folds of Honor. They got a great video. And what's super cool about this, guys, free shipping over $299. A great video talking about the Folds of Honor Foundation. And there's the other products. They got bars and rounds. They've raised over $375,000 through this campaign that's funded over 75 scholarships. Okay. Thank you, First Mint, for sponsoring the basement, guys. Please support them. All right. It's the reason why I can be here. This is how Susie and I support our family. Did I ask you to subscribe to the channel yet? Please subscribe. I think I did. How we doing? Huh, guys? We are gold and silver investors. We are doing very, very good right now. Okay. And I can't do it today. Hold on. When the sheeple, all right, when they wake up, we got Wall Street waking up. They'll wake up the sheeple. And they're doing it. Okay. They are doing it. Let's go. It's going to be a flood of money coming in. This comes from CNBC, right? Mainstream media says, forget the 60-40 portfolio. Here is what you need in your portfolio, says Bank of America, one of the biggest banks and investment banks in our country. Okay, let's see what they're saying. Instead of the 60-40 portfolio, investors may want to consider the 25-25-25-25 portfolio to pick up some extra returns. According to Bank of America's Michael Hartnett, the portfolio has outperformed the traditional allocation of 60-40 as well as last year. It consists of an equal division. Here's the important part: amongst stocks, bonds, cash. And I can't believe I'm saying this, but Bank of America is saying to put 25% of your money into gold. Okay. The strategy is ahead this year, both in the U.S. and globally. The U.S. portfolio, we already know what that is, has gained 16% year to date, according to Bank of America. Meanwhile, a plain vanilla 60-40 portfolio is only up 10%. But wait, there's more. Okay. That's Bank of America, though. The reason why that's important, everybody in America knows about Bank of America. They're maybe not the biggest bank. I think Citicorp has like 200,000 employees, but Bank of America is a behemoth, is massive. They are waking up the sheeple, those neighbors of yours, those relatives, your uncle Dick, right? Your Aunt Mary, that are like, gold and silver. That's not no, that's not where you put, no, Wall Street. Now, it's mind-numbing. This is the important part. I saved this for you. It's mind-numbing. And what's good when this happens for gold, it's also going to happen for silver. Okay? But it's mind-numbing to think right now in this country, in the world, even, but in this country alone, the United States of America, the richest country, there's a reason why that's important, that we're the richest country. And now the big financial institutions are telling people to put their money into gold and silver. Guys, Americans on average have what, like 1% or less, maybe 1.5% of their financial assets in precious metals. Imagine, if you will. Imagine what would happen if people put 25%. Or, like Morgan Stanley is saying, we'll look at that one next, 20%. There's not enough silver and gold to go around. We don't even need, Rick Rules talked about that, right? Like, we don't need gold and silver to be loved. We just need them to be less hated. And it is going to be a flood of money. Think about it. If Americans put 20%, 10%, right, of the wealth that's in the stock market right now into precious metals. You think it was hard to get silver during the C-19 crisis when you had to wait 8 weeks, go to your local coin shop, and they'll say, well, take your money, but we'll see you in 8 weeks because we ain't got no silver. Sorry, Buttercup. Imagine what it would be like. And these are the big Wall Street banks that CNB that have never talked about precious metals before. This could be huge. This, I know it's crazy to think about these incredible prices in dollars for gold and silver, but remember, the dollar's just nothing. It's paper, right? I've said all along, the silver price could go to $15 zillion. It happened in Zimbabwe, right? And a lot of people, powerful, smart people, say that the United States has kind of become like a banana republic. All right, I know that's a stretch, and I'm not saying the dollar is going to become worthless overnight and zombies will be walking around and you'll have to use, an ounce of silver to buy a meal, anything like that. Maybe that'll happen. I hope it doesn't. But even under the best circumstances, we're heading into a situation. And I'm telling you, right? Okay, let's go. I'm not going to repeat it. Let's go look at the new data, the newest, most interesting. Oh, boy. Here we are. This came from the Silver Academy Substack. Always interesting articles coming from the Silver Academy. Central banks gold binge dwarfed. Okay, we know, for those of you who've been living under a rock, the central banks have been buying gold, and even now a few of them silver, but gold like crazy. But this is going to make what the world central banks are doing with gold look like child's play. Wall Street's 20% gold allocation is 100x bigger. And there's the Morgan Stanley. So wait a minute. We've got Jefferies so far saying $6,600 gold. We have Bank of America talking about the new 25, 25, 25, 25 allocation of assets, which includes 25% in gold and then another 25% in cash. And now we have Morgan Stanley talking about 60-20-20 portfolio strategy with gold in there as an inflation hedge. Okay. Here it is. Sit down, take a deep breath, and imagine rainbows and lollipops and all that good stuff. Because if even a fraction of the 62.8 trillion now invested in U.S. stocks begins rotating into gold at the 20% allocation level now endorsed by Wall Street giants, it will unleash the largest and most sustained wave of gold buying in the financial history of the world and the universe. Yes, right? You'll be able to go to your local coin shop and hold your hand to your ear, and what you'll hear, right, are steps pounding on the ground, but you'll also hear this, the sheeple. And you, my friend, will already have had your gold and silver. This is not a mere rebalancing, but a generational capital shift. Think about that, guys. There are $63 trillion now in U.S. stocks. I don't even know what the total, hold on, let's go look. Let's do this together. Let's go look at what the total market cap of silver is. Here we go. I'm going to bring you out to Google with me. This will be interesting. Total market, the keyboard on this computer stinks. Market cap of silver. See what AI says. The estimated market cap is difficult to pinpoint due to varying methodologies, but multiple sources have placed it in the hundreds of billions to over $1 trillion. Okay, so let's say $1 trillion. Okay, let's go back here. Where am I? Bear with me, guys. Is that it? That's where we are, right? Nope. Oh, we got, I forgot it. I've got a secret, and then there's a secret weapon as well. Let's say it's $1 trillion. Let's say for silver alone, just money coming out of the stock market, it could move the silver market like 4 or 5 times easy. If we're talking only about, let's say, 5% of the global stock market, which is now at 63 trillion US dollars. I don't think all this stuff. Here we go. Let's read this as well. And we got Jeffrey Gundlach with Morgan Stanley CIO Mike Wilson and Jeffrey Gundlach both. So we got Gundlach as well, right? The bond king calling for a 20% minimum goal. Here, I'll highlight it for you. I know you guys, what color you want? How about we do a nice shade, wrong thing, of what the heck is going on here? Hold on, guys. Now, I'm going to highlight this. I don't know what's going on here. There we go. And we will do this in orange. Because I forgot, we got Jeffrey Gundlach, the bond king from what, PIMCO? The smartest guy in the room. He's also telling everybody 20% gold. And remember, what's good for gold is good for silver. But Mike Wilson and Jeffrey Gundlach both calling for 20% minimum gold allocations. If U.S. portfolios, pensions, and IRAs start to shift, think of that, portfolios, pensions, IRAs, we're talking about up to 12.56 trillion in potential gold demand. And we know, okay, we know what that means for silver as well. But for gold, that would be nearly 100 times more capital than the combined efforts of every central bank on the planet. This is not just a new chapter for gold. It's a seismic event, a legitimate transformation of the world financial order. Central banks were just the opening act, all right? And the real gold rush is only now about to begin. And we talked about that, basement dwellers, and there's a reason why. Even now, we need to pay such close attention to this. We sat down here and said, don't listen to what those central bankers say. Listen to what they do. Right? We all have experienced it. Somebody in your life who's kind of a chronic liar, right? You get to a point with them where you don't listen to what they say, you listen to what they do. And that's exactly, unfortunately, because I think he's a cute guy, and that's exactly what we said with him all along. But not just him, Jerome Powell, right, with his toilet paper money printing machine. No, also all the central bankers in the world. And we talked about this, and that's the reason why we said, let's watch what they do, not what they say, right? Because they're all about manipulation. And what they were doing, with the exception of that fine gentleman, Jerome Powell, was buying gold. Oh, if we did that, if we paid attention to what they did, Now it makes sense. Act two in that process are the big Wall Street banks suddenly saying you need to put 25% Bank of America into gold, or Jefferies saying $6,600 gold, or Morgan Stanley talking about 20% into gold, and Jeffrey Gundlach, who I almost forgot about, and Ray Dalio, the world's biggest, most successful hedge fund builder. The guy started Bridgewater Capital. It's the biggest hedge fund in the world out of his apartment. Now it's the biggest hedge fund in the world. He says, put money into gold. But there's a secret weapon. I promised you a little surprise at the end. And that's going to be good for silver. Don't worry. You know me, right? I love gold, but I also love silver. No doubt about it. Oh, and by the way, before I forget, I need to say thank you. Very important. First Mining Gold. You know I love gold mining stocks. I always have. They sponsor my channel. It's a stock I owned long before they sponsored my channel, a company I believed in, a company I made videos about long before some of my earliest videos are about First Mining Gold. They are a gold development stage company in Canada. They have two big multi-million ounce gold development stage projects in Canada. That's a good jurisdiction. Massive amounts of gold in the ground. They're developing the mines. They're going through the permitting process, all that stuff. It's very, very interesting. It's gold in the ground, right? Mother Nature's vault, as I like to say it. But what's really interesting about them is the fact that they're in a great jurisdiction. The gold is there. The gold is in the ground. And the big mining companies of the world, right, need to replenish their pipelines. They want to do that with big, large-scale projects in good jurisdictions. And not only do those big mining companies want to replenish their pipelines, but now, because the big gold miners, they're making like $2,000 per ounce on each ounce of gold they dig out of the ground. They're all suddenly focused on growth. Okay. And there aren't a lot of big development stage projects in favorable jurisdictions. Do your own due diligence. I'm not a financial advisor. Don't buy or sell anything based on what I say. But if you want to learn more about First Mining Gold, go right there. What about our secret weapon? We can't hear this one enough. Okay. We talk about central banks. We talk about Wall Street. But do you realize that who owns what? I'm going to give you a quiz. See who was paying attention. I think I talked about this a week ago. Who owns 1 in 10 ounces of gold in the world right now? Huh? Who? 1 in 10. Indian housewives, Indian women. Can you say housewife anymore? I don't know. Let's check, see if Susie's there. Are you there, over, Suzanne? Nope, she's not there. She's probably mad at me because I said the word housewife. Anyway, check this out. See if I can pull this up. This can be a challenging one. So, hey, Craig Edmonds, thank you, man. Thank you, buddy. Thank you for the super chat. Great to see you, Craig. Here we go. This is interesting. Share this tab and said from lockers to economy. Okay. India's 25,000-ton private gold reserve. Analysts say the allure of physical gold goes beyond culture and tradition. In a world unsettled by inflation, trade wars, and geopolitical conflicts, gold remains a reliable hedge against uncertainty. There are those Indian women, but let's go down here. I highlighted this. Indian households are sitting on one of the world's largest untapped financial assets. Okay, there's a reason why this is shocking. Okay, you can correct me if I'm wrong, but I'm going to share this reason with you. But let me get through this paragraph. Physical gold and women are at the heart of this glittering reserve. Chartered accountant Nitin Kasik, in a recent post on X, formerly Twitter, revealed that Indian women alone hold nearly 11% of the world's gold, amounting to about 25,000 tonnies. I used to know what a tonnie was, tons, whatever. Guys, that is absolutely incredible. And guess what? I got news for you. I know some Indian women. I've got some Indian neighbors, my kids' friends' parents. And anyway, I know a lot of Indian people. They're never going to sell their gold. I mean, never. And guess what? Another little secret for you. They love, but I got the big reason why you can really be excited about this one. They love silver as well. In silver jewelry, it's going to explode. I'm telling you. Okay, look, hear me out here. But silver jewelry will be what everybody's talking about 6 months, a year, 2 years from now. People in the fashion industry, but people in the silver industry. 1 in 5 ounces of silver that are used every year are used in silver jewelry. And people are done selling their silver. I'm getting that from all my contacts. And don't worry, I got that shocking piece of information I'm going to share with you about those Indian women and their 11%, 1 in 10, more than 1 in 10 of the world's gold ounces. But people don't realize, right, on top of in regular investment demand in silver, on top of the industrial uses, which I won't go into right now, but this jewelry thing, I think, is going to be huge. Look at this, right? This came from my friend Bullion Betty. I love it, right? Yeah, look at that. That's a silver gold, I'm sorry, silver round coin in a beautiful silver. And I mean, when you hold this in your hand, I don't know if you can see it. You can kind of see it. It's special, okay? It's beautiful, right? And it's also more affordable. People aren't wanting to spend. Let me get this back nicely. Well, I'm a little bit of an OCD guy. People aren't wanting to spend all that money. Okay, the reason that's so crazy, thank you, Craig, for the super chat. The reason that's so crazy with the Indian women, as far as I've been told, that's 3 times the amount of gold that the United States of America has in Fort Knox. Thank you guys for being here. Please subscribe to the channel. We're having a lot of fun down here in the basement, and we're going to continue to have it because we are moving forward with silver and gold. Okay. It's going to be an interesting ride. I said it to you all 3 years ago that I'd be with you through the whole thing. We're going to keep riding it out. Be prepared for volatility. It's not always going to be green. We will have some red days, but the overall trend is to the upside. Okay. Thanks for being here. All right. Have a great night, and I will see you next time.